Now, Wednesday, Thursday, Micron and Nike are reporting. And I'm keeping a close eye on these ones. Micron, really, for how overall is the memory market. If you don't know Micron, they're basically one of the biggest memory chip makers in the world, okay? Like literally one of the biggest suppliers in the world. So everything you could possibly imagine from our electronics device has memory in it. Pretty much every single thing, okay? Whether you're buying an iPhone or whether you're buying an iPad or a new computer or anything, okay? It all has memory in it, and a lot of that memory comes from a company named Micron. And, you know, it's interesting because Micron, I've followed the stock very close for years. I actually had a close friend who's owned the stock, and he owns a lot of the stock for a long, long time. And the company's been going through kind of a tough past, I would say 12 to 18 months. But it's interesting in regards to Micron, right? Company is supposed to, lose a bunch of money this year, right? It's supposed to have revenues down 50% this year. It's just a complete disaster. But the weird thing with Micron, it's a weirdest thing. For this particular company, you actually want to buy it when it looks like the end of the world, when its revenues are going down like substantially. And by the way, this is something that's normal for Micron. Like Micron has these insane boom cycles where, their revenues are all of a sudden going up 20%, 30, 40, 50, 60, 70%. It's insane. And they're bringing in so much money in terms of profitability, like they can't find enough money printers for all the money. It's ridiculous, okay? They need to start, making their own bank vaults. It's insane. And they go through these other tough times where it's just like revenue's horrible, they're losing money, and it looks like the end of the world. But every time I've seen it, that's actually when you want to be buying Micron. And then every time the company is raking in money, that's actually when you want to be a seller of the stock. It's not like a typical stock that has a long-term trajectory of like a great business and like, we're going to get even bigger and bigger. So this isn't Apple, okay, or Microsoft or one of those sorts of companies, right? Or Palantir. Micron is much more of I would call it a 1 to 3 year type trading play. Some people like to do stuff like that. So I like to just keep an eye on it. It's not a stock I personally own or am interested in owning. I just like to keep an eye on it from the standpoint of what's going on in the memory market in general, right? And I will say, it looks like AI should be a big boom for Micron, at least for the next, I would say, few years here. And so if you want to go down that rabbit hole, a lot of folks have written, well-done articles in regards to Micron and the AI opportunity for Micron and things like that. So yeah, if you want to go down that rabbit hole, you certainly can, okay? Nike, I'm keeping a close eye on Nike because Nike's actually going through a tough time in their business. Their revenues are expected to go down 6% on a year-over-year basis, right? And their earnings per share is supposed to come at 61 cents. This versus 90 cents a year ago. These are bad numbers for Nike. Nike is one of those companies you would always expect it to be slam dunk 4 to 9% revenue growth. 4 to 9% revenue growth is like a slam dunk for Nike. When a company comes in and is expected to basically have revenues go down 6%, start looking around like, what is going on here? So Nike's clearly got problems in their business model right now, right? And so I'm keeping an eye here to see if this is an opportunity that I might want to step in Nike. I am a believer in Nike long term. I just think they're going through a kind of a tough time short term. But the one thing I'll say is, I honestly think Foot Locker is an easier play than something like Nike, because I've looked at it and I'm like, would I rather buy more Foot Locker shares, which is a stock I own, would I rather buy Nike? And I really like Nike, but at the end of the day, Foot Locker gets a huge component of their business from Nike, right? But just think about this. Think about this for a moment, right? If Nike is having issues with their brand or whatever, that means other people are probably picking up market share. Guess who's the retailer that sells other brands as well? It's Foot Locker. So with Foot Locker, you kind of get the perfect scenario where if Nike is doing well, Foot Locker is going to succeed, obviously, because a lot of Foot Locker's business is Nike. But if other brands are succeeding, Foot Lockers can still capitalize on that because you go in a Foot Locker store, there's a lot of brands other than Nike as well. And so that's just something I'm thinking about, like from a risk standpoint, and especially when I can get a company that's trading at, P's and forward P's of, like 10 or less, which is what Foot Locker is right now. Another dividend yield of a massive 6% on this one versus a Nike, which is a much, much smaller yield, not even close. And the other thing is, Mary Dillon's in year 1, and Mary Dillon's a very proven, great CEO. She led Ulta Beauty for 8 years, and obviously she did tremendous running Ulta Beauty, right? And so is she going to have the same success at Foot Locker like she did Ulta? I wouldn't be surprised. I don't need her to have that level of success. she can just be any success. I mean, that's a win for Foot Locker when you're trading as cheaply as the stock's trading. But if she pulls off what she pulled off at Ulta, I mean, the sky's the limit for Foot Locker over this next, 5 years or so. So I'm really excited about that one. I've looked at Nike versus Foot Locker, and at the end of the day, I like Nike, but Foot Locker's just easier money from a risk-reward standpoint, in my opinion, without nearly as much brand risk that a Nike has for doing something that makes people mad or whatever, okay? NASDAQ, okay? Now, do you see what I see? Oh, baby, I see something here. So, NASDAQ just in the past few trading days is down about 3.3% or so, okay? This is a little baby start for what we need. We need another 7 to 10% down for the NASDAQ, in my opinion here. This NASDAQ has climbed. It has climbed rapidly. I feel like this next few weeks here is a perfect time to send this NASDAQ down another 7 to 10%. This would be absolutely perfection if this happened. We need a nice size pullback. I'm not talking 3%. I need a 7 to 10% pullback. That would make for an extremely healthy market so we can have our next run coming out of this earnings season, essentially, and it would give us some really extraordinary opportunities in this market. Now, how do we get that? We don't need actually anything concrete to happen. We just need some worries, okay? We need a little anxiety to creep, a little irrational anxiety to creep into this market a little more, okay? We know some stuff happened in Russia, okay? You can dive down that rabbit hole if you want to, okay? If there's more worries about what's going to happen in Russia, what's going on with Putin, what's the decisions here, what's going on there, that could definitely ramp up some more anxiety in the market in general. Student loan payments are starting up again, if I recall, in September. So if you start to have some real worries creep into the market about, oh my gosh, is this going to devastate the economy? Is this what causes the big recession? Yeah, we haven't had it. People are still out there spending money like it's nobody's business. But maybe this is the thing, okay? So it doesn't even have to be the thing. All it has to be is a worry about it being a thing, and that can send you down the market. You don't need concrete things. All you need is anxiety, irrational anxiety to be in the market. That's all you need, okay? European inflation, still very high. What's the European Central Bank going to do? They're probably going to continue to raise rates here for a bit, okay? That's a, worry out there for the market. What does that mean for the market, right? AI, was AI just all talk, right? Just a bunch of hype. Maybe the numbers aren't going to be there for these companies that are supposed to report these amazing AI numbers over these next several quarters, right? So we don't need any of this to be concrete right now. But the bottom line is we're not going to get clarity around any of these subjects right now. So it's a perfect time for the market to freak out over all these subjects, not knowing the end result of this, right? We're not going to know the end result of student loan payment situation. So it's a perfect time to freak out over that for the market. We don't know what's going on really in Russia, so it's a perfect time to freak out over that. European inflation is still a problem. Perfect time to still freak out about that for the market, right? AI, we don't have clarity on if the numbers are going to be real coming in for these companies or if maybe it was all just talk and hype, right? So right now is kind of the perfect scenario for the market to just kind of like freak out here in the short term about all these things about what they could be, right? And the market usually is going to look at things a little more glass half empty in many of these situations. So it's a perfect scenario, folks. We have the perfect scenario going here to get a certain type of pull down here. And so that's kind of what I'm hoping happens here as we continue to kind of pull the market down over the next few weeks to the next even 2 months, if that was to happen, okay?